Thank you very much. Hi, everyone. My name is Malvika, and I work with NG Impact, which is the advisory arm of NG, and we help clients with the sustainability transformation. It's my real honor to be here together with my panelists, Chinhao, Rajiv, Maria, and Masja. Now, we're going to talk about one of the key challenges facing us today, which is how can we help mobilize greater capital towards long-term investments in renewable energy infrastructure? Now, we all know that the real barrier is not the availability of capital, but its distribution to where it needs to go, especially in developing economies. And what policy and technology barriers can we actually help to overcome that problem? And this is especially important today during the pandemic when public funds are getting diverted, attention spans are shortened, and there are other priorities. While at the same time, there is an increasing need and recognition to be focused on sustainability and decarbonization. So I know we have a short period of time, so I'm going to jump right in and ask my first question to Maria from Funding, which is about what are the key challenges to mobilize greater capital, especially Maria, from a European perspective, if you can provide that.
Yes, thanks. Well, in Europe, we have a feed-in tariff guaranteed by financially strong governments or strong industrial PPA off-takers. So in emerging markets, PPA off-takers, even the public ones, are partially weak, and further governmental guarantees are required by international lenders. Furthermore, when it comes to PPAs, Europe has a strong working electricity market, which enables those private PPAs. Because PPAs are usually sold only 60 to 70% of the electricity amount, and the remaining amount is sold at the spot market. So in emerging markets, there is partially no spot market where you can find hedging products. And another simple thing is the currency. So with the euro, Europe has a hard currency, which is held in large amounts with all big international banks, and therefore doesn't need to be hedged. In emerging markets, when it comes to PPA offtake, it's partially remunerated in local currency, so such as the dong in Vietnam. And international banks are struggling, and there is often no long-term hedge available, which makes it really hard for project financing. So, and the last thing is probably due to the auctioning system in Europe. We also see many small projects, and we see that they receive a preferential treatment in the auction. Investors and banks don't like small projects because the due diligence effort is high compared to the investment volume. But Europe has many regional banks who are dedicated to those small tickets. That certainly helps.
Thanks so much, Maria, and welcome from Berlin, where she is signing up from. Rajiv, could you, I think Maria talked a bit about the comparison between Europe and Asia. Would you be able to, confirm or add more perspectives on the Asian side of things and what challenges you're facing from the point of view of an infrastructure investor?
Sure. Thanks, Malvika. I think, from the perspective of Asia, I think some of the items which Maria highlighted probably will have similar trends in Asia, but I think as we all know, Asia is very different. We have a combination of developed countries, developing countries, and emerging countries. And different countries are at a different stage of growth in terms of renewable energy. So if I talk about some of the countries, specifically China, India, Japan are way ahead of the game in terms of where the renewable investment has come through. Australia is also all new project financing for power sector in Australia has all been renewable energy, for example. But on the other end of the spectrum, we have countries like Myanmar, where there has been very limited development in the renewable space. One of the challenges for some of the sort of smaller countries or emerging countries is obviously availability of capital, but also access to that capital because of currency risk, regulatory risk, and also governance standards, for example. But I do see positive trends overall in Asia because we have seen significant amount of institutional capital, both coming from Asia and globally, to be invested into the Asian context. Obviously, we have seen large investments into renewable platforms like Veena Energy, which is now our largest renewable company in Asia, through investments by global infra partners. Similarly, I think I'm sure Chinhao is going to talk about their investment into Greenco. So I do see that on one hand there are challenges, but I do see the opportunities to be very significant. And I was talking to one of the large renewable companies earlier this week, and what they highlighted is actually, despite COVID, 2020 has been the busiest ever for them from a renewable energy investment perspective, because projects have still been ongoing, investment decisions have still continued to be made, and constructions, while there have been some delays, but it has still gone on. So I would say overall, I am fairly bullish in terms of the opportunities in Asia.
Thanks so much, Rajiv. Chinhao, from the point of view of a sovereign wealth fund and a long-term investor, what are your thoughts on what we just heard? Are you equally bullish?
No, thanks, Malvika. I think, as my colleagues here have said, renewables actually is very mainstream now as an investment destination or target for long-term investors like GIC. So if you look, right, China, India, as Rajiv mentioned, are leading the pack in terms of renewables development. China has over 700 gigawatts of renewable power today. So long as there is strong regulatory framework, good governance, availability of capital, and underlying feed-in tariff or PPA, the investors will come in, right? Particularly the large institutional investors, because these are naturally very long-term assets for investors like ourselves to hold. That said, in the smaller Southeast Asian countries like Myanmar, as Rajiv mentioned, or even Vietnam, the growth in renewables is good, but it's still very small scale and subscale for large investors like GIC. So we are all watching the space, and we think that Southeast Asia will continue to develop and catch up with the big boys around them. And certainly will become also a investment destination of choice in the coming years. One thing we are all looking out for as long-term investors is the development of storage. And that is very important to complement renewables as it tries to replace or supplement base load and intermittent power. So something that we think is another area of growth in the renewables for investors like us.
Thanks, Nijna. And we'll talk a little bit about how we overcome some of the challenges that you have mentioned. But before that, I'd also like to hear Masja's perspective, who works with institutional investors.
Thank you, Malavika. Yes, when I hear the stories from the other speakers, well, of course, not GIC as a very large institutional investor, but I feel like I'm investing in listed equities, credits. I'm coming a little bit from space, whereas the others are down on earth with their feet in the different projects. But when I look at our business, for large institutional investors, indeed, often investing in green infrastructure is a different category. It requires a lot of management attention. Needs to have sufficient size. Everything is already mentioned, but I do see that there's a lot of interest in sustainable investing and impact investing, and I think that is really driving flows towards these type of investments. Now it's only for us to find the right, let's say, vehicles to do that. And one of the things that we have found is that, for example, green bonds is something that really helps us invest in specific areas that we want to invest in. And this market is growing fast. And we find that often these bonds trade at a premium, but they also, or when they issue, but they also remain at a premium during their lifetime. So in terms of returns, it's more or less in line with traditional bonds. So for us, that's a very good way of driving that capital towards certain projects. Now, from an equity perspective, we often engage with companies on their climate change transition strategies. And challenges that we find there is that you really need to do in-depth research to be able to have that conversation, to have that knowledge that you guys on the ground have that we don't have as we invest in large companies. And also, this transition is a very long-term issue. And we often have an investment horizon that's maybe a little bit shorter than that. So we really need to, as Chinhao is also saying, we really need to have that long-term investment horizon. Although I also agree with the fact that renewable energy is is really becoming mainstream, and the costs are coming down. It's not like it's more, it's a good opportunity.
One follow-up question, Masja. I think, does the increased management attention that green capital requires make it more expensive, and is that slowing down some of the capital flows, or is that?
Yeah, specifically to the smaller projects, I would think. So we need to find vehicles that are relevant for let's say middle-sized institutional investors to be able to invest in those projects.
Yeah, great, thank you. Well, the next thing I want to focus on is basically what are some proposed solutions, I think, to the challenges that we discussed. And Masja, you brought up the question of green bonds. I think, Chinhao, could you share your experiences with green bonds and tell us a bit more about that?
No, of course. I think this is very an exciting topic for us. In fact, about 2-3 years ago, our investee company called Greenco, it's probably one of the leading independent power producers of renewable energy in India, with about coming to 5 gigawatts of operating capacity across wind, solar, and hydro, have launched green bonds. And 2-3 years ago, I would say you still need to do a fair bit of marketing to institutional investors. But today, there is a lot of momentum, and I think this has certainly helped a lot of developers considering, as they build out their projects, to tap the capital markets. So the Singapore Stock Exchange actually has played host to quite a few green bonds that have been issued over the past 2 years. And that has gained a lot of momentum. In fact, the SGX also offers certain incentives for first-time issuers, repeat issuers into this space. I think we are all investors, and we're very encouraged that once you open up more sources of capital and there's more appetite for green bonds, not because it's green, but also that they are long-term, they have a very good underlying economics. And that opens up a new pocket of liquidity for the developers.
Rajiv, would you also be able to share your experiences from the SMBC side on this?
Yeah, sure. I think the key for creating more flow of capital into any country is to create a virtuous cycle of capital flow, and be it debt or equity. And that implies that when you have small investors coming in, developing certain projects, then they are pulled together to create platforms. Then big investors come in to basically take out those platforms. And eventually you get equity capital market instruments coming in where people like Masja and others would probably invest. So I think that kind of a cycle is also equally important on the debt side of the business. And when we think about debt side of the business, typically the capital or the debt financing is provided by a combination of banks initially. But it's important that the banks have an exit mechanism so that they can create room for doing additional projects. And I think that's where what Chinhao talked about as green bonds, which is a capital market instrument, is quite relevant. Another way of sort of creating this virtuous cycle is something called securitization of existing portfolios of loans. And in this regard, Clifford Capital, which is established by Temasek, and SMBC also supported the establishment of Clifford Capital, set up a new entity called Bayfront Capital. And the key objective of Bayfront Capital is to take over existing loans from the bank balance sheets, and then to basically put that together as a portfolio and then securitize that and sell it to the institutional investors. So that actually helps the banks then create room in their own balance sheets to allow them to do new transactions. So I believe it's critical, and governments have to consider how to create this virtuous cycle of investment, both from a debt as well as an equity perspective.
How could governments, what could governments do? And we're looking at, of course, one of the regions we look at is Southeast Asia, which has a myriad of many countries with different regulations. Any perspectives on what are some of the gaps there?
Yeah, I think obviously there are a number of things which can be done, again, to promote renewable energy transactions in a number of these countries. Some of the countries have introduced feed-in tariff mechanisms or PPAs, or basically ways to underpin the economic interest of the investor. So that is definitely one way to sort of bring in more capital. But in terms of, as we talked about, I think some of the challenges in countries like Vietnam or Myanmar or even Philippines, etc., is they are subscale in terms of size of those businesses. So we are still talking about small projects, 10, 20, 50, 100 megawatts. So for a large global investor like, I don't know, GIC, it's very difficult to basically justify spending the time and effort on that. So how do we sort of allow pooling of these smaller projects into larger platforms is one of the things which probably can be done by the government. And probably this is not relating to only capital flow, but another area where I think governments in Asia have to spend a lot of time, and maybe they have to also support, is relating to what we talk making renewable energy baseload. Obviously, battery storage is probably one example, but I think the other opportunity is the entire green hydrogen sort of value chain. We can think about not just renewable from the solar wind perspective, but actually green hydrogen could be a very large source of business development. And that's where I think an interesting announcement by the largest utility in Japan is JERA. They have actually announced that they want to reduce carbon CO2 by 20% by 2030 and zero by 2050. And what they have actually publicly revealed is one of the ways for them to do that is also in a combination of ammonia and hydrogen, and in addition to renewable energy. So I think strong support to that sector could also probably help capitalize more business.
Thanks, Rajiv. And NG itself actually is also looking into hydrogen in through several projects. I think one point that you talked about, which is platforms and how do you scale some of the opportunities and how small projects, I think, especially in this part of the world. And Maria, I know you had some thoughts on that. So I would love to hear your thoughts on how we can help scale small projects and provide support to small projects.
Yeah, so platforms such as fundingport can help standardize projects for investors and lenders, which is especially important for small projects. So started with guiding the project developer through the credit or investment approval, relevant information and documents. We basically level the playing field for all parties. Another example is matching projects according to country, technology and size with investors and lenders. It's really simple, but it's already a huge benefit for the project developers who usually don't know those players and who are active in multiple countries. And the rates get compared on the platform for the project developer. And we see decreasing PPA prices, so a competitive interest rate could be a key success factor here in order to reach a risk-adequate return, or IRR. And so in some platforms such as fundingport, or also in APEC, I know that there's Positive Energy, another platform, they could speed up the process by approximately 50%.
Thanks so much, Maria. I know we only have sort of a few minutes left. What I wanted to do towards the end is perhaps have each of you just provide a 1 or 2 minute example of projects that you've done and what went well or badly, and what are some of the key lessons from that. Maybe could we start with Masja?
Yeah, I mean, we don't do specific projects, but let me just give an example of how we analyze green bonds, because there are green bonds that we consider to be green, and there are green bonds that we consider not to be green. Mm-hmm. So we look at 5 things, is the green bond framework aligned with external standards? How are the proceeds allocated? What are the projects that the money goes to? Does the company also report on impact? Because, of course, in the end, that's why we're doing it. We want to make sure that there is enough positive impact on the environment, for example. But we also believe that we want to buy green bonds from companies that actually have companies or countries actually that have a good environmental strategy that's credible. Because if, I give an example, there was a green bond that was issued by a country for renewing its infrastructure in railways, which is good, and also rural development, organic farming programs, renewable energy projects, which we all support. But this country really had a very poor environmental strategy where coal is still a big part of the energy mix, and it's actually rising as part of that. So if we were to assess whether or not we want to invest, we also look at the whole strategy of a company or a country, and if we don't like what they're doing, then we don't want to invest in that green bond strategy. So it really needs to tick all the boxes for us.
Thanks, Masja. Rajiv, I guess back to you. I know you already shared the example of Bayfront. Anything else you'd like to share?
Sure. Yeah, I think maybe just talking about a specific example, we were involved in the development and also the financing of the first wind farm in Indonesia, and it was a large size 100 megawatts plus transaction, and it was fairly complex and very challenging to negotiate the PLN, PPAs, and other aspects of it. But more importantly, just talking about the financing and equity part of it, because of, I think, the efforts put in by the original developer, they could actually attract a regional Southeast Asian company to invest jointly on this project. And initial financing, interestingly, was done by a combination of OPIC, which is now called DFC from the US, and SMBC with some sort of a cover from OPIC. But once the project got de-risked, actually with completion, as I mentioned before, it actually created opportunity for a lot more capital to flow into that same company. So we could actually then bring in IIF, which is Indonesia Infrastructure Finance, as one of the lenders, SMI, which is again an Indonesian entity, as one of the lenders, and it could sort of widen the sort of investor base. So that is sort of as a very good example of what I said as creating this virtuous cycle for lenders.
That's a fantastic example of, I think, as you said, widening the investor base, and hopefully we see a lot more of that. Chin Hao, your perspectives?
Yeah, sure. I think I would just leave that. I think renewables is certainly very mainstream, and a country's policy and regulation towards the development of renewables is absolutely critical. And we've seen the success of the countries like US and China in invigorating this sector and pushing the renewables agenda, and that has really helped the development of the country's renewable landscape. So we have benefited in our investment in Greenko, and because of India's very supportive regulatory policies and framework, and that's created a tremendous tailwind for the sector in India. So that is a very critical thing that we've learned, and has given us a very positive outcome in our investments.
Great, thanks, Chin Hao. And then Maria, would you be also able to share an example?
Yeah, we once had a biomass project in Kenya, and the project developer was not aware that the development finance institutions need an extensive set of external DDs, like environmental, social DD, tech DD, tax, insurance, financial model, and they ran out of funds to finance those additional 150 to 300,000 euros, which is the price for those set of due diligences. So the good thing was we were involved early, and we tendered the due diligence providers on the platform and received better rates. And we found a development finance institution issuing a grant for those DDs and financing the DDs. And I wish that there were more of those grant programs, because they really enable small projects.
Yeah, no, that's definitely something we see, here in this part of the world. And I think it's quite a complex process if you're a small project to be able to go through the entire process and fill out the various paperwork. So definitely, I think those kind of platforms that aggregate would be fantastic. I know we have a couple of minutes left, and I just wanted to, I guess, perhaps end with COVID-related perspectives. We were talking about that just before the start of the panel. I think what COVID may have done is increase execution risk on some projects. But I know we also heard from other panelists saying that actually that's not been an issue. Can we hear, I guess, some perspectives on how this has been an issue and how you see it being overcome, perhaps? Because I know there have been delays, there have been a lot of project delays, and a lot of projects are in blocked because of this. Maria, perhaps you could.
Yeah, we did indeed a research with the university here in Germany, and we were asking the renewable energy market participants, such as banks, investors, project developers, on the impact. And the banks only increased the interest rate because to the new uncertainty of the situation, only for several weeks, and we are already back in the interest rate volume. And also the EU issued this relief program that you only need 25% less of risk capital allocated for those projects. And but the investors, we saw that they indeed increased the IRR expectations, but maybe Jinhao is the better one to tell on that matter.
Sure, maybe I'll share our experience. In particular, we were constructing quite large-scale projects in India. I would say certainly the COVID, the pandemic lockdowns really did hurt the sector from the perspective of actually carrying out construction work. However, with during that two months or so of lockdown, the companies were very spend a lot of time putting out together procedures and policies to make sure this health and safety of its workers were okay. And once the lockdown has been lifted, following this procedure, they could still mobilize workforce to continue construction. The good thing for the country in India, for example, they allowed interest rate moratorium. So projects that were borrowing from the banks did not have to pay interest for 6 months, for example. Second thing is where there's an expectation for the delivery, the COD of the project, in let's say, and for the next 12 months, there's, because of the COVID lockdown, there's an extension, an expectation for it to COD maybe 3 months or 6 months later. So there has been a lot of flexibility given by the government, by the regulators, given that the pandemic struck and the developers had to cope with the situation. For the operating projects that are already operating, I must say, everywhere in the world, there was a dip in power consumption. So actually, most revenues for energy companies, power companies, renewable or otherwise, dipped when people were all hunkering at home. But remarkably, once the lockdown was lifted, industrial activity, manufacturing output increased. You saw the rebound very, very quickly across Europe, Asia, in India. In fact, India recovered way faster than other parts of Asia. So I think while the COVID pandemic is not behind us, I think the system, the companies have all worked through the policies, procedures, and also to cope. And so I think we're heartened where it is headed.
Thanks, Jinhao. I think that's the end of our time. I'm glad to hear that we've heard a lot of optimism on this panel about the future of renewable energy infrastructure investment. So,
thank you.
Great.
Thank you.
Thank you very much.
And grateful for that wrap-up, Malavika and her panel of experts, for helping us see the long road ahead and how we can invest in renewable energy infrastructure more efficiently. In fact, one of the main takeaways I did get from this discussion was really that mindsets have shifted. Renewables now being seen as a mainstream investment, which is very different mindset from just a few short years ago. So very hopeful to hear, and certainly something that can be built upon.